What's interesting is that the market is ignoring some major positives.
Now, against this backdrop, where should investors invest?
So while valuations are improving, they are still elevated compared to the historical level in the sectors which are getting corrected now.
In these times, when the markets fall, investors always face the dilemma: should they keep investing, should they stop, or what should they do?
Obviously, stay invested.
Hello investors, welcome to this month's Equity Outlook by Axis Mutual Fund. I'm Shalini Gautam and I have with me our Head of Equity, Shreyash Devalkar. So welcome Shreyash, straight to the subject, to the topic. Now markets have seen a steep correction from the lifetime highs touched in September. Where do you think the markets are headed?
Absolutely Shalini. Markets are down 15 to 25% from their peak and Nifty Next 50 has fallen by 24%. One major factor has been that foreign investors have pulled out money. FI have pulled out $25 billion while DI have invested almost $37 billion.
Okay. Do you think this is just a valuation correction or there is something deeper at play?
It's a mix of both. Valuations had become elevated and at the same time we have had concern about global uncertainty, about earning cuts and tariff-related risks. That said, the worst of the correction may be behind and we may see stability returning to the market or the market being range bound for the while.
Do you think this correction is fairly valued?
They are definitely looking more reasonable. On the 1 year forward PE basis, Nifty is looking actually closer to slightly lesser than the long-term averages. When it comes to the comparison to the emerging market, India's premium has moderated while it was at very high premium, making us look more attractive on a relative basis. What's interesting is that the market is ignoring some major positives like tax rate cut during the budget, RBI's rate cut and liquidity support, increased government spending and better than expected GDP outlook. These are the things which has been the positive development in last 6 months.
In terms of sectors, what do you think? Which sectors are really doing well, which are not really favored anymore?
We are seeing a clear split between the high growth and low growth sectors. High growth sectors that have been re-rated, such as power, capital goods, electronic manufacturing services, fintech, quick commerce, travel and tourism, retail, chemical, hospital and real estate. On the other hand, some sectors that have not re-rated much, or actually some of them have got de-rated, are the sectors like lenders, insurance, FMCG, consumer durables, large cap IT, pharma, metal, agri, construction and oil and gas.
So it's surprising to see pharma and FMCG, they are usually the cautious sectors. What is your take on these sectors?
Exactly. But there is a difference in this. There is a difference in earning visibility. FMCG and durables are facing weak demand, which is slowing their volume growth, while pharma demand is stable, but the valuations haven't moved much.
Then which are the sectors which are delivering?
See, earning growth has been sector specific. Sectors that are doing well in earning growth are capital market related companies, consumer durables, healthcare and real estate. Banks have delivered strong profitability even as credit demand has slowed down. IT services are seeing gradual growth, but US tariff concerns continue to remain an overhang on the IT sector. Sectors that are struggling with earnings are FMCG and consumer durables due to low demand, weak volumes. Automobile and consumer companies are under profitability pressure.
Okay, so now against this backdrop, where should investors invest? Should they look at growth or should they look at value? Or it should be a mix of both?
This is the classic dilemma. Growth risk versus valuation risk. High growth sectors have already been recognized by the market and they have gained, and that's where they carry high valuation risk. While in case of low growth sector, they are undervalued, but they may look cheap, but we are carrying a growth risk in that. So while valuations are improving, they are still elevated compared to the historical level in the sectors which are getting corrected now.
In these times, when the markets fall, investors always face the dilemma: should they keep investing, should they stop, or what should they do? What is your advice to investors?
Obviously, stay invested. Market corrections are part of investing. If you wait for the perfect time, you may miss out on the best opportunity. India's long-term growth remains intact, backed by strong macro stability. Earning growth is expected to be in the mid to high teens over next 3 to 5 years. Increase in private sector capex and discretionary consumptions. So I would say stick to asset allocation, stay diversified, and don't get swayed by short-term noise.
Great. Thank you so much, Shreyash, for your views. I think this was really needed against the steep correction that we have seen. Thank you very much. And thank you to all our investors for joining in this month's Equity Outlook. See you next month.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.